and welcome to Hustles Zetu. Today we are going to be discussing understanding the Finance Bill 2023 and the implications in the marketplace for the businessmen and women in Kenya today. I am with a financial consultant, Mr. Mutonyi, for another time, and it's a delight to host him so that we get to understand what are the compliance regulations that we in the business place, in the marketplace need to be able to be very aware of so that we keep on our toes or we stay informed. I am at the Vicmark Hotel. Vicmark Hotel has amazing conference facilities. They have a great restaurant. They have great accommodation facilities and a rooftop lounge right in the heart of Nakuru City. So welcome to the show, and I hope that you learn something that you need to implement this year going forward as a businessman. Karibu sana, Mr. Mutonyi.
Thank you very much. Yes.
So help us demystify and understand the Finance Act 2023 and the implications for business owners this year.
Okay. Yeah. Thank you very much, Eunice. Before we start, we need to understand what is tax and who are these people who are usually taxed.
Who tax us?
So we say tax is a mandatory contribution to government.
Okay.
Yeah, by anyone who earns income or who has a profit. And because we are talking about businesses, so there are different forms of businesses. Okay. When you start a business, there are different ways in which we formalize our businesses. There are individuals who run businesses individually without even registering them. Yeah, so those are individuals. Yeah. Okay. And then there are people who can come together and then run a business as a partnership. Yeah. So that is a partnership. Okay. And still, people go on and formalize and form what we call companies. Yeah. So they go and register in the registrars of companies, and they're able to register companies. So they carry businesses like that. Yeah. So for the individual, there are people who don't even register formally. They just operate that without registering.
Buying and selling.
Yeah, buying and selling. But there are people who go ahead and even register. Yes, it is in their name, but they register the businesses and operate. Yeah. Yeah, and for every model of operating, there are disadvantages and advantages as regards to the taxes. Yeah. Okay. But generally, that is how businesses operate. Yeah. Okay. So now after that, so when they run businesses, their obligations, as we have said, tax is a mandatory contribution
in any economy.
In any economy, yeah. Yes, and there are reasons why the taxes are levied, yeah. Because maybe there is a government in place. The government has to offer services to the citizens. Security, healthcare, education, all those things, yeah. So the policemen you see out there, the tax that we pay as citizens, they are paid through that, yeah. Okay. And the government just does not decide to tax people, yeah. There has to be laws that are passed, and that is why you hear like the Finance Bill 2023 was passed, and when it is passed, it becomes a law. That means it can be enforced on the citizens, like the Kenyans, and they are supposed to pay these taxes. Yeah, yeah. So when we talk about the different forms of taxes, and we are going to look into them maybe in a deeper way, but some of them that really affect the small business people, because that is where we target mostly, is number one, there is the income tax. Yeah, so it affects small businesses. We also have a corporate tax. It also affects small businesses. We have a value-added tax. We have turnover tax, and we have a residential income tax. Yeah, so those are some of the taxes that affect the small businesses, and we can go into detail one by one, and we see who it affects, and maybe so that we can come back and see what the finance bill affected in that regard.
Please at least help us now understand those that you have listed, who it affects, how, and then so we now get into.
So we have for small businesses. So from the outset, I would like to describe how taxation works. Yeah. Okay. So I've said it is incomes or profits. What is usually taxed is either the incomes or the profits. Yeah. So if you're running a business, you're going to get some incomes, or at the end of the year, you're going to get some profit. Yeah. So this is what happens. So let's say, for example, you sell pens. Yeah, and you sell, you buy pens at 100 shillings. Yeah. No, you sell at 100 shillings. Let's for example, you sell pens. Yeah, you sell a pen at 100 shillings. Yeah. So when you bought these, when you sell this pen, you had bought it. Yeah. And maybe there was some expenses towards that. Let's say, for example, you bought the pen at 50 shillings. Yeah. So that is the cost of purchase. So you sold at 100, but you bought that pen at 50.
Yeah.
On your way to go and buy, there are some expenses that you incurred.
True,
Maybe 10 bob for transport, so that that gets 50 plus 10, that is 60. Maybe you also maybe you branded or you packaged them in a different way. Maybe it costed you 5 bob. Maybe another expense here and there. Yeah, maybe you ate lunch along the way. Yeah, so those are the expenses of carrying out that business. Yeah, so it can total up, let's say, for example, 80 shillings. Yeah, so you sold at 100, but the cost of doing that business is 80 shillings. So 100 minus 80 leaves you with 20. So the total expenses are 80, but you sold the pen at 100. Yeah, so that leaves you with a profit of 20 shillings. Yeah, so the government now taxes the 20 shillings. Yeah. So if we are saying about, we are talking about corporate taxes. Yeah. So that is where we're going to start. The corporate taxes is at 30% of that 20 shillings. So which is 6 shillings.
Yeah, true.
Yeah, so that is what we call the corporate tax.
Corporate tax.
Yeah. So many businesses, what they think that the government want to tax the 100 shillings, the selling price, which is not true.
Which is not. And I think people, businessmen, and especially the small business owners who may not really have established systems for them to be able to afford accountants and people like in your profession. Most of them don't even have the knowledge on how to go about this, because big corporations, obviously there's a whole finance department, so that business is taken care of.
True. So many businesses don't understand how it works. So they think the government is going to tax them the 100 shillings, which is not true. You have to deduct all the expenses that you incurred when you are doing that business. So if you transport, electricity, rent, maybe you have employees, you have to deduct all that. And like in these harsh economic times, you're going to find the profit, the amount of profit people are making is very small. So now that is what the government now taxes, 30%. And still the government, the business can go at a loss. So government only, the tax is only on profit. It is not on the losses. So government is going to tax, or the tax the government will require is only on the profit. So let's say, for example, I sold that, I bought that pen at maybe 80, maybe the expenses were maybe even maybe 30. So that gives us a total cost of 110. So that means I have gone to a loss. If 100 shillings that I sold minus 110, that means I have a loss of 10 shillings. So that's what government can tax. And even the following year, even if I made a profit of 10 shillings, that means I will carry over that loss to the next year. So the next year I am not even going to pay the taxes, because it is a loss. So that is why it is good to keep records, so that I can know if I am making money or I'm not making money. So that is what we call corporate tax. But the government says, as you have said, you're not in a position to keep records. Maybe it's a very small business. So maybe keeping records can be a bit cumbersome. Maybe you don't have that time because you are alone. So government introduced what we call turnover tax. Government introduced turnover tax. And that was it has been there, but last year it was they increased the tax rate. So turnover tax is people who are selling between 1 million and 25 million per year. So if you divide, let's say for example, the lowest 1 million, the total sales, that is in a year you are able to sell a total sales of 1 million, which maybe it's roughly around 80-something thousand per month. So if you're selling 80,000 per month, you fall under turnover tax. You can opt to pay turnover tax. So how does it operate? So it is 3% of the gross sales. It is 3% of the gross sales. So this is how it happens. So maybe let's say, for example, you under that. So the person who falls under turnover is a person maybe selling 80,000 per month, or maybe per day can maybe roughly around 2,800 or 3,000 per day. So the sales per day is 3,000. Yeah.
Wow.
Yeah, per month, maybe 80, 90,000, the minimum, yeah? And then the maximum is 25 million per year, yeah? So how does it operate? So let's say, for example, you sell the 90,000 because it is paid monthly, yeah? So you sell the 90,000. So 90,000 times 3%. Yeah, so 90,000 turnover tax is calculated 90,000 times the 3%. So that person is supposed to pay roughly maybe 3,000 per month in taxes.
Wow.
Yeah, and it is a final tax. What do you mean by a final tax? Once you pay it, that is it. There are no returns even to be done. Yeah. So
there are no whatever returns that is in it.
Yeah. Once you do it, that is the final.
Really?
Yeah. So you pay the turnover tax, you pay the 3,000 maybe per month, or depending with the. I'm just giving the 90,000 as an example. You're paying 3,000 because it's 3%. Yeah, it is final. That is it. You don't have to show government these are the records or what have you. You don't have to show that. Yeah. So that is a turnover tax. Yeah.
Wow.
So that is what the government now is encouraging small traders to adopt, and many traders have really adopted the turnover tax. Okay. That is what they are doing. Yeah.
Okay.
Yeah. So now from there, we go to rental income because many small businesses, people, you have a rental income. So rental income. So if you have you are a landlord and you're paying rental income, people you're receiving rental income, maybe 24,000 and above per year. So you're supposed to pay a tax. It's called residential rental income, which is 7.5%. Initially it was 10%, but the Finance Bill 2023 amended it. Now it is at 7.5%, which is a deduction. So 7.5, and it is also monthly. So it is also monthly. So if you receive maybe, for example, 100,000 in rent, you're supposed to pay 7.5% of that, which maybe 7,500 every month. Every month to the government.
Again, they don't have to file.
So for them, so what happens is most of the maybe people who are landlords, you are going to realize they have other businesses. So they will file maybe, and that is where accountants come in. That is where we come in. We can support you how you're going to file all your incomes. So even the person who is running a small business, if they have another source of income, they are supposed also to file. But if they don't have another source of income, they just file any returns. But if you have rental income, you're going to file we are going to file a complete for all your income. So that is what we call residential rental income. Rental income tax. Which is also a tax that you're supposed to pay in money. Now, I would want to tell you where people go wrong. Most of the time is that so you have a house, you are a landlord, you receive rent for 5 years, 6 years. You don't pay this rental income. So what the government is doing, or the taxman is doing, they are going to go around, they are going to come. People think that the government will always discover in one way or the other. They use a lot of things. They have employed a lot of people to look for people who are not paying taxes. So they are going to discover. So the best thing is people to start paying, because what they do, they will do an assessment. And then they say, maybe from the year, maybe for the last 3-4 years, you are supposed to be paying this much rental income. So you can imagine per month, let's say for example, you're supposed to be paying, even give it 10,000. That is in a year, that is 120,000. In 3 years, that is 360,000. So they will come and tell you, give us 360,000. That is what the taxman is going to come and tell you. Sometimes it goes up even into millions. So it is always good to start paying these taxes and also learn about it. So we tell people, just come and ask. We consult us and ask which are some of these taxes that we are supposed to pay. Then the other tax that is also very critical is also the value-added tax, the VAT, which you had the other time. So VAT is a tax where it's on goods. There are some goods which have VAT. So what does that mean? So let's say, for example, you buy something, it already has that VAT. So if you go to hardware and buy maybe iron sheets, they already have a value-added tax. So the hardware collects, we are just using an example, collects VAT on behalf of the government. So that iron sheet you're buying, maybe it was supposed to be sold at 100, but the government applied VAT, so you're going to buy it as 116. So you're buying plus VAT. So the hardware is going to collect these 16 shillings and remit it to the government. Yeah. So that is where now there's those people who deal with vatable. We say vatable goods. Yeah. They are supposed now to be VAT compliant. Yeah. And that is where now brings us to the issue of that came about Finance Bill 2023. There are those things that were introduced in Finance 2023, which now relates to those taxes.
Okay.
Yeah.
Wow. Very well explained. So for somebody, I'm thinking now, not for somebody, for me now, who runs a curtains business. I'll order something from Gikomba, I'll order something from Eastleigh, I'll order for blinds from a Korean company in Nairobi. So what do I need to do? Because I want to understand, and especially for me as a business owner, I want to understand the e-teams, all that conversation. I was prospecting somewhere and Muhindi told me we need an invoice, an e-teams invoice. Help me understand that.
Good. So that is a very good question. So what has happened of lately, the government is closing in. So they are saying the tax
people
base,
like us.
the tax base is very small. The people who pay taxes in Kenya are very small.
Yeah.
So they are saying, why don't we expand this tax base? Yeah. So they want everybody now to pay the taxes. And one of the ways is to integrate everybody. So with technology, they want to integrate. So we are in this big spider web where we are all interlinked. Yeah. Yeah, so this is what happened. Like in your case, I would want to explain to you. So number one, as a small business owner, you can opt for turnover tax because I can assure you between 1 million and 25 million per year, very many people fall under that. Yeah, so true. You can pay turnover tax and
that's it.
That's it. Nobody is going to ask you questions. Yeah, but now challenge comes where you go to an organization that requires an invoice that is e-teams compliant. Yeah, just for example, you supply like that big blinds, and you're supplying to people because when you supply them, that is an expense to them, or that is the cost of doing business to them. So they need that to deduct from their sales.
Okay.
They cannot just deduct. That is where the catch now is. Yeah. So I said when you are doing business, you sell 100, you have to minus the expenses. Yeah?
Exactly.
These expenses that you are
now that a big company is incurring
is what we call allowable deductions. Yeah? And KRA is saying you cannot deduct if the invoices is the receipts. In ordinarily we call them receipts. If the invoices are not ETR compliant.
Oh my goodness. They
have not gone through the KRA system. So that is now where we are saying if you are supplying them, they will tell you need to have an e-teams. Wow. But for small businesses, there is an update that came in last week, although it has not been formalized, which they said for small businesses it is not mandatory. But I don't know how they are going to go about it. Yeah.
But you see, now that can lock me out from doing business. So I need to be compliant.
In other words, you need to be compliant.
It's either I lose the job,
or you be compliant.
Exactly.
So that means you are going to be producing invoices that are e-teams compliant. So what does it mean? Maybe generally, let me maybe expound it.
True.
So what KRA is doing, they want to be seeing your sales and your expenses in real time.
Oh my goodness.
Yeah. So when
if I issue now that e-teams,
they'll be able to see.
They'll know that the Habu Deco has done something.
Exactly. So that is what now they want to do. They want all businesses to be in a system where when they are Times Towers or in the offices,
they know this has made a sale.
They know you have made these sales, and these are your expenses. So they already know probably your tax is going to be this.
Oh my goodness.
Yeah, so if previously what we used to do is you are the one who is maybe self-assessing. You sell, you have your receipts here, you do the calculations, and then you tell KRA, I sold this, and if you want receipts, I have them somewhere, maybe in my office, in a box.
And maybe they're not even the actual figures, most likely for the Kenyan.
Maybe, I don't know, but I have, so I sold this, and they have receipts. These are my expenses, and I have receipts in my office. So if you want, you are telling KRA, if you want to come, you can come. So you make a statement, a profit and loss statement. You say, this is what I sold, these are my expenses. And now, can you now, these are the profits. So this is the tax that you're going to do. we are going to get from that. So KRA has said now, yes, that is okay, but now can we make this electronic?
Can we go digital?
Yeah. So if you sell, can you issue? If you sold 100, can you issue an electronic receipt
of that amount?
Of that amount, so we can see.
So we can
if
see.
you have an expense because you the person who is who you have bought from that expense you are incurring, can we see it?
Exactly.
So KRA now is saying if we can be able to see it, that is okay. So they can be able to determine. Yeah. So that is what happened now with the Finance Act 2020. They changed that. Yeah. So from January this year, that was the deadline, but they have still pushed it. So from January this year, so we are supposed now to January 2024.
Yeah.
All the invoices for people who want to be who are supposed to be teams compliant, they are supposed now to put those invoices in e-teams. Yeah.
In e-teams.
But if you have not registered, you still have up to 31st of March 2024 to register.
So take us through that now, because I'm actually asking these questions for me and I believe many others. Yeah. So how do I register? Because I want to stay ready. Sitaki kupoteza biashara ya muhindi na mwingine bali.
Okay. So what you do is you just go to the KRA website. You're going to find e-teams. There is an e-team registration link. Okay. Then you register. There's some documents you're supposed to fill, and then you send them to KRA and you fill some details of your organization. Yeah, and then you send to KRA, and then they are going to approve. They are going to approve that, and then you can now be logging in and generating those invoices.
Well, now that is
to mean so that is one way. The other way is you look for a tax agent. Like you can come to me. I'm going to. There's some forms you're still going to fill. I do that on your behalf, and then you are going to be. You are now going to be logging in your e-teams account. It's like e-citizen. Let's say it's like e-citizen.
You know, it sounds very complicated.
Yeah. Like let's use e-citizen. It's like e-citizen where you log in, and now you can be able to generate those receipts which are e-teams compliant.
Okay. So if I need help, ndakutafuta.
Yeah, if you need help, you can come. You come with something small.
So the other thing is that now, of course, you've told us some of the new changes and regulations. Kidogo, kitambo used to do it manually. Now,
now
it is digital.
Yeah, it is digital. The other changes, the reason you heard about, there was a lot of hue and cry last year because of the finance bill. There were some changes that also affected other people. Number one, there are changes that affected Kenyans, all Kenyans. Initially, petroleum products, that is petrol, was the VAT was 8%. So the VAT was at 8%. Yeah. But when the finance bill was passed last year, 2023, they changed the VAT to 16%. And as you know, once you increase the cost of fuel products, everything else goes up. Yeah,
true.
Yeah. So and everybody saw that the cost of fuel went up. So that meant the cost of doing business also went up. Yeah. Or maybe if you didn't raise your prices to your customers, that meant your profit shrank, because now your expenses are more, because maybe your transport costs are more, and maybe your prices remain the same. Yeah. So that is the reason. Some of the things that really made a lot of Kenyans raise their voices. Yeah. The other thing was the issue of the housing levy. Yeah. So initially there was no housing levy.
Yeah, true.
And then it was introduced. And the employees, definitely, people who are employed, when they had they're going to be deducted 1.5.
Deductions,
yeah. So there was those are some of the main things that really changed. Yeah. And also the turnover tax. Initially it was people doing turnovers up to 50 million. It was brought down to 25 million. Yeah.
Wow. KRA hawana mchezo, I believe.
Yeah, sure. Everybody, the way they are going in the next 1, 2, 3 years, everybody will be in KRA.
Tuko tumepatwa.
Yeah.
Na M-Pesa, watu wanafanya biashara na M-Pesa, what happens? Ama how do they now get this mkulima? Juzi nimesikia wameongeza wakulima, for every 100 shillings you, I think, sell, kuna shilingi 5.
Yeah. So there is also another form of tax we didn't talk about. It is called withholding tax. Yeah.
True.
So withholding tax is even for the farmer, they sell, let's say, for example, to Quickmart or Naivas, they sell goods worth 100,000. You sell your capsicum, you sell your onions or whatever it is. Yeah. So once you sell to them, the government is introducing that, what we call the withholding tax of 5%. So Naivas or Quickmart is going to withhold 5%. So they are not going to pay you 100,000. They're going to pay you 95,000. Yeah.
Na mkulima napeleka vitu supermarket.
Yeah, exactly. The
Not
same
soko,
case, not soko. No, soko they can still do the turnover tax.
Yeah, true.
And if, they can still do the turnover tax. Yeah. But if it is a farmer who is taking them
To an
established maybe a corporate, the government is saying pay 5%. Yeah. Which is also a final tax. Once you pay that 5%, that's it. You can go and do your other business. Yeah. Yeah. So that is so government is so as I began this saying, like it is tax is a mandatory contribution.
It is.
Yeah, that is paid by citizens. Yeah. So what has happened is previously not many people used to pay taxes.
Yeah. True.
Yeah. So now government is now bringing widening the tax base.
Yeah. True.
Now a lot of people now are realizing I'm supposed to pay taxes. Yeah.
Okay.
Yeah. So that is where now by and by people will understand. Yeah.
Wow, nice. Now, of course, my other question was that Kenyans say that they are heavily taxed. Do you believe that this is true? Of course, we've discussed that.
Okay, so I cannot, if they are saying they are heavily taxed, who am I to say no? Yeah, if that is what they are saying, yeah, that means they are heavily taxed. Yeah. But what happened is the tax regime that now is taking shape or that is being introduced. As I said previously, a lot of people are not paying taxes, yeah. But now the government is expanding the base, is widening the tax, yeah, the tax net. So what is happening is it has come at a very challenging time where the economy is also not doing well.
Yeah, true.
So you can imagine that my business is not doing well, and I've not been paying taxes, let's say for example, and then the government now comes and says, I need to pay taxes. Yeah, so you can now imagine the feeling of that entrepreneur.
Exactly.
Yeah, true. Where things are now on a downhill trajectory. And now somebody says, yes, you used to make 100, but now you're making 50. But on this 50, I need 5 shillings. I need 5 shillings. Yeah. So that definitely is not going to go down well with a lot of people. Yeah, so that is why now you have seen the hue and cry. People really feel pressed because even some businesses have gone out of business since COVID, and then a lot of things, the dollar depreciation, the elections, the dollar has depreciating, the economy is not, the world economy is also affecting us in a big way. Inflation, really the things that the inflation the prices have really gone high, the cost of doing business has gone high. So, and then now bring the taxation issues. So that is why now you hear a lot of people complaining.
That's a whole economics class, eh? Yeah. That's a whole economics. Yeah. Now, so what should a business man or woman do to stay ready for 2024 going forward?
So when an idea whose time has come, the only thing is to embrace it, yeah?
Exactly.
And we always say change is the only permanent thing, yeah? I remember when we were moving from analog to digital. That was around 2014, if I remember right. Yeah? And what happened is...
The TVs?
Yeah, when the TVs were moving from analog to digital. Previously, we used to only be analog. And then we moved to digital. I remember then the TV were very resistant. Yeah? Yeah, there was like a song that used to sing tunatoka analog tunaenda digital, and the TVs were very resistant, and they switched off. Actually, I remember they switched off the
analog.
The NTV, KTN said they are not going to move, and they switched off. And then they said we are not going to broadcast if we have to move. And I remember, I think the then Cabinet Secretary for Information Technology, Dr. Matiang'i, said that is okay if you want to switch off, you switch off, but we are moving to digital. And they said that for a few days, and then they realized the government was serious. And then they had to accept, and then we shifted now to digital. Now, you can imagine what happened with digital. Now, everybody has a TV.
Exactly.
Yeah, there are so many TVs because we moved to digital. Yeah. So what happens is once the government initiates something like that, it is very hard for it to come back.
Exactly.
Yeah, even if another regime comes, even if another president comes, things are going to remain the same. Exactly. So the best thing is to accept. and start preparing for the new dispensation, for the new way of doing things. Yeah. So if, for example, you have not been paying taxes, or you've been running a business, you not been paying taxes, it is high time now you start embracing that idea of paying taxes. Yeah. If you have been running a business and maybe you don't even do, you don't do accounting, you don't do records, you don't know how much, you don't know how much you're making, profit or loss. This is the high time to do that. Yeah, I had a client this morning, and we were discussing about that, and she was telling me that now she has realized, even for her own self, she needs to know how her business is running.
Exactly, and I think it's very important.
Yeah, it's very important. Even herself, she needs to understand. I did this. This is how I performed last month. This is how I am performing this month, and you can be. They can be able to compare. Yeah,
it is true.
This is what I did well last month. This is what I did.
Is she a sole proprietor?
Yes, she's a sole proprietor. Yeah.
Okay.
Yeah. So now I was telling her the only thing we can do is now starting keeping these records, so that now we can be able to support you in your entrepreneurial journey. So it is high time people accepted that. For SMEs, that is for big businesses, there is no way of escaping that, because you are issuing invoices to other people. You are so the KRA will always catch up with you very easily.
Let me ask. Let me take you back. That gadget for the e-teams, I have to pay for it, or?
So okay, maybe I should have explained well. So there is what we call the ETR, electronic tax register. So that is what government has been using. That is what have been people have been using. Yeah. Initially it was analog. Then they brought the digital ones, and then and also those digital ones, they are e-teams compliant. That gadget. Those people who have that gadget, they are already compliant. But now they have said you don't even have to buy that gadget. You can do it on a phone, you can do it on a laptop, you can do it on a computer. So that is where the e-teams is coming in. Yeah, you don't have to buy the gadget.
So if I am on my laptop and I am doing an invoice, it's something, but it has to be printed? No?
It can be printed if you want to print it, or you can send it as a soft copy. Yeah. So you just log in to the e-teams account that you will have created. Once you log in, you issue the invoice. You can print it if you want, or you can send it as a soft copy.
Another question. For proprietors with business names, sole proprietors with business names, the PIN is now an individual's PIN on the e-teams.
Yeah. So for the proprietors with a business name, the PIN is the same.
It's the personal PIN.
Yeah, it is the same.
Okay.
Yeah, so that is still the same. Yeah.
Wow. Now another question. I'm asking these questions because last year I had some stuff that I was to do, and I was being told your company needs to be upgraded and have the company PIN. The withholding tax and the turnover tax for small business owners. Please, the relationship between that. If one is doing business with a company that will require that they withhold tax.
Okay. Yeah. So withholding tax. Withholding tax, the way the name suggests, it's withholding. Like you withhold. So like for personally, I do business trainings, and I offer to big companies. So when I go to them and I train maybe their staff, I train the employees, maybe I train whoever I'm training. For us now as a consultant, we are supposed to pay a withholding tax of 5%. So if I charge them 100,000, that institution is supposed to withhold the 5,000. Let's say, for example, I'm training Vic Mark Hotel. I come here and train their staff on customer service or marketing, or sales and marketing. So once I come here and I charge them 100,000, they are not going to pay me 100,000. They are going to pay me 95,000.
Exactly.
So that is withholding tax. So they have paid. They will pay now 5,000 directly to KRA. Now they send me 95,000. So that is what we call withholding tax. Turnover tax is for small businesses. So for small businesses that are operating, maybe within the threshold of 1 million up to 25 million, they can opt to pay turnover tax. They don't have maybe time to keep records, to do the calculations for profit and loss. They can just say, like wholesomely. So we'll do 3% of the sales that we do.
The conversation here was, if this LPO goes through, you will be required, the company is going to, now the big boy company is going to cut withholding tax. So the person who was advising me was telling me, make sure you have a company PIN such that withholding tax is not attached to your personal PIN.
Good. So yes, it is. It can be done that. Yeah? So if you don't have a company PIN, so they are going to deduct from your personal PIN. They can do it both ways. They can deduct it from your personal PIN, or if I have a company, like I have a company, they deduct it from when I'm doing the returns from the company PIN.
Okay.
Yeah. So being compliant, what we are saying is being compliant has its advantages because if you are compliant and you have a tender, let's say for example, if you want a tender from government or from some big institutions, they require you to be tax compliant.
Very true.
Yeah, so for big institutions, they require you to be tax compliant. So there are some tenders, if you're not compliant, if you don't pay taxes, government is going to float a tender, or even a big company, or companies that is compliant, they are going to float a tender, and then they tell you, we cannot give you this job because you are not compliant.
Exactly.
Yeah, so that is one of the things. Even when you're applying loans to the bank, so
nowadays they are checking that.
No, they are not checking that. But let's say for example, you have you have let's say for example. You have a company, so you need to have audited reports, audited financial reports. And what that means, you have also to be tax compliant. So it is very important. Being compliant is very important.
It is actually very, very important.
Yeah.
So how somebody should go about it? I think I interrupted you on that. Sorry. So that now we conclude the conversation for our listeners, what they need to do and how to go about it.
So if you find yourself in a space where you need to apply to be e-Teams compliant, especially number one, if you are dealing with VAT, that is automatically you have to be e-Teams compliant. If you are dealing with goods that are vatable, that is automatically you have to be e-Teams compliant. So if you have the gadgets that is e-Teams compliant, the ETL machines that are e-Teams compliant, that is okay. But if you don't have, you can now get a gadget that is the ETL machine which is e-Teams compliant, or even register online. So you go to KRA website and register. So you're going to fill your details, and there is a form you're going to fill. Then you register. Now you can be able to log in and be able to issue invoices which are ETL compliant. e-Teams compliant. Then the other thing is for big businesses, there are some systems that are there that are already e-Teams compliant. So very good systems that they can be able to install in their business for businesses which are big. So they can be able to use. The systems are going to help them manage their company well, and also the systems are going to be e-Teams compliant.
What do you consider a big company?
So there's some companies that
make between how much and how much.
So, so for turnover tax, as we said, is for small business maybe making between 1 million and 25 million
per year.
But there are even some companies which maybe if their margins are healthy, maybe even if they are selling maybe beyond that, maybe 25 million per year and above, and they want some system, very good system. They can install these systems, which are very good to manage the enterprise.
Do you have those systems?
So we install for clients. They are different. So we advise clients you can install this one, you can install this one, depending with the kind of business they are doing.
For small business, the one M to 25M, is there
there are some which are very easy. There are some systems which are simple to use. Some are even free. The others which are paid for. So the small businesses can use them. So when you sell, you key in. When you're generating invoice, you use them. You key in your expenses, and every now and then you can know what profit you are making.
Wow. I think ndakuona nyuma ya tent.
No problem.
So we conclude.
Sure.
Your parting shot?
So my parting shot is very simple. This is a year that it is good that everyone complies. So if you have any questions, you can always reach out to us. Number one is have your records. Keep your records. Whether you're using a system or you're using papers, that is in an analog way, just make sure that you have your systems, you have your records. Exactly. Secondly is if you have any questions, if you engage somebody who understands.
Exactly.
Engage somebody who understands.
Or you can even reach to Mr. Mutonyi via the numbers on the screen, the Mamlaka TV numbers. You can direct those questions. They will be directed to us, and we can be able to answer those questions, or even maybe call you if you need further advice on how to just put your business in order.
Yeah, sure.
Exactly, yeah.
Sure.
You can even share your number, maybe.
Yeah, my number is 0723 515 438. 0723 515 438. You can reach to us, or you can even go to our social media pages, GoldPlus Advisory, GoldPlus Advisory, and we will be in touch with you.
Exactly.
Yeah.
Wow. So I hope you have taken this seriously. But I'm so serious. I need to see you. I need to put everything in order. I would hate to lose business because I cannot produce an e-Teams invoice.
Yeah.
It is very, 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 very sad. Actually, I went to an Indian's office and I said, I don't have, but I can work on it. They've not been able to get back to me. So I don't know whether that is what maybe cut me off. I may not really know. I don't know. I've not done any other follow-up to know whether I would still be able to get the order. But they asked, will you give us an e-Teams invoice? And I was a bit stranded for a few minutes. So anyway, I will tafuta you ndio nijipange mapema. So for a business owner, I think you really need to take this seriously, like you've heard. It's a safe thing for you to be able to be compliant, and it's also very advantageous even for you to be able to track how is your business doing, where are you losing money, what do you do. You know, it's a yardstick for you to be able to measure how are you growing 3, 6, 1 year in terms of durations of period of time. So thank you very much for watching. We were discussing the implications of the Finance Act, Finance Bill 2023 on the environment in the business arena in Kenya today. So thank you very much for watching. We are at the Vicmark Hotel. Thank you once again, and kwaheri.
Mamlaka Television, impacting generations.